How did I make $6,026 trading Amazon call options at 9:56 on the 30-minute time chart? So 9:56 is not this candle, but this candle right here. So as soon as I saw Amazon land on the 9-day moving average, I bought Amazon call options, waited for a bounce, and then at 10:04 I bought more Amazon call options. Then at 10:33, when I sold out the position, I secured an easy gain of $6,026 trading Amazon call options. So what was the game plan here? So basically for me, whenever the chart looks like this, usually it indicates to me that pretty much that stock is going to be in an uptrend for pretty much the whole day. And so what I want to do is I want to take advantage of that particular stock if it's going to be in an uptrend for pretty much the whole day. So I pretty much just waited for I just waited for Amazon to see if it could land eventually on the 9-day moving average, and that's what happened on this 10 candle on the 30-minute time chart. Basically a bounce. I was just waiting for a bounce to occur off the 9-day moving average, and basically this next candle. So when I sold out the position at 10:33, actually I should say not even that candle. So basically, let's see, this candle right here. So basically when this huge green candle showed up, basically I sold within like 3 minutes of opening of that candle. So when I sold out that position right at 10:33, I made $6,026 trading Amazon call options. How you could have played Amazon, right, is pretty much like this. You could have done this. You could have waited for opportunities here, right? You could have used this opportunity here, and then pretty much you could have used this opportunity here, right? And then basically play Amazon call options as soon as it lands on the 9-day moving average. Wait for a slight bounce, right? So that way you can make money. And then basically if you bought at 235.81, you could have sold out in the next candle on the 1330 candle as soon as it approached the 9-day moving average. So you could have sold out the position as soon as it approached 236.04. So you could have made money, a little bit of money trading Amazon call options there, trading, using the 9-day moving average as support. Here's a way that, let's look at an opportunity here on the on Finviz. So let's see if we can use, I don't know, let's use XOM. Let's see if we can make an opportunity out of XOM. Okay. This is how you could have played XOM. So you pretty much see that this opening candle of XOM had trouble going above the 9, 20, and 50-day moving average. It just broke down below those moving averages. Then you can see that this candle had the same problem, right? So what you could have done is you could have waited for XOM to slightly start going up, like how you see on the chart throughout the day. You could have bought here XOM put options as soon as it approached the the 20-day moving average, and then you could have waited for a rejection. So basically the next candle you could have sold out as soon as XOM approached the 9-day moving average, which is 109.41, and so you could have made money trading XOM put options. So pretty much when it comes to looking for opportunities in the market, you kind of want to, I guess in a way, act quick and not just don't get into a position if you don't know what you're doing, or if you don't know if you can execute that plan. So if you're feeling like that plan that you have in your head is probably not going to be executed, then don't go for it. I just, me personally, I would rather wait on the sidelines, watch, I would say I analyze what other stocks, are there potential opportunities present within those stocks on the 30-minute time chart, whether it's playing calls or put options. So let's see if we can look at another opportunity. I don't know. Let's use Amazon. I mean, not Amazon. We just did Amazon. Let's do Apple. Okay. Let's do Apple. Apple. So pretty much, this is a very clear indicator of Apple and being in a downtrend. So what I mean by that, you can pretty much see the 9 and 20-day moving average, how it looks like that on the chart. Typically, that indicates that that particular stock will be pretty much in a bearish trend for pretty much the whole day. That's pretty much what happened with Apple. So you could have played it like this way, right? You could have waited for Apple to get rejected here, or here, right? Now, here's where you could have played put options on Apple. You could have played put options here on the 11:30 candle. So as soon as you saw Apple approach the 9-day moving average, you could have bought Apple put options, waited for a rejection, and then your selling opportunity could have been as soon as Apple approaches the 180-day moving average. So as soon as you see that rejection from Apple of getting rejected by the 9-day moving average, you could have sold out the position as soon as it approached the 180-day moving average, which reads 238.51. So that's where you could have sold out your position out of. So so it's just like you have to be quick. You have to be quick when it comes to these opportunities. Pretty much, I would say this strategy is more like you need to stay glued to the screen pretty much the whole entire day. It's as much as it sucks, that's the only way. I feel like that's the only way you're gonna make money when it comes to trading options, because with options it's pretty much like a thing where you need to be you need to go in with a game plan and execute it correctly. If you don't execute it correctly, it's going to go really, really wrong. And pretty much you also have to have in mind your percentage target that you have set in your mind. So if you're aiming for a 5 or 10% target, try to aim for those percentage targets. Now, if it's looking sour for your trade, then I would suggest leaving out of the trade as soon as it's down 10% or more. I would, when I'm down in a trade and I'm not feeling confident and it's not going my way as the plan was according to in my head, I'll just take the loss of at least a minimum of 10% or 15%. That's the most that I would rather lose than lose a lot more money and just hoping for the best. So, for me, I'd rather wait. I'd rather sell out my position as soon as I see it down 10 or 15%. I'd rather just, move on to the next trade and just, learn from this, past loss or experience. So that is pretty much it. You can use finviz.com. It is totally free. That's pretty much it. This is not financial advice. As always, take care and bye.